It's Sunday night, and I think I want to do this regularly. Just have a live stream. I know I go over a lot of analysis throughout the week, and sometimes I flip. Like, this last week I was feeling like we might be in a bear trap, and now I'm thinking to myself, I don't know, looks pretty bad. Looks pretty bad. It's never good when the bank fails. Remember, analyze, make a plan, follow the plan. That's my sticky note. I look at that thing like 5 times a day because it's stressful. Day trading is very stressful. I need to try to get my layout pulled up so I can see the chats as they're happening. So bear with me for just a second while I try to figure that out. Content, live. This live, yeah, open this up. And yeah, it's gonna take people a minute to trickle in, I imagine. I'm just gonna click on this. Let's see here. Well, I can upload a thumbnail for the stream. Let's do that. Let's, how low will it go? Let me get that one up there. That was a pretty good thumbnail, I thought. I'm going to save that. And I've got a bunch of stuff pulled up on gold currently. I bought some more gold. Whenever I feel panicky, I buy gold. It's just like, safety. Flight to safety. Okay, so how did I do this last time? I think I actually went into the your channel. Let's see here. I think I have to like watch my own stream, which is weird, but yes, click on that. There we go. I'm gonna mute myself because I know I have my system noise on. Maybe I can mute that as we're going here. And there's the chats. Dude, did you hear the futures gapped up 300 points? Yeah, wow, okay. We'll definitely be looking at that. That's definitely for sure. 300 points, that's nothing to bulk at. That's quite a bit. So let's just go over there first. Let's just go ahead and do it. And maybe I'll switch this tab over to Yahoo Finance. Yeah, look at this. S&P futures are up, well, 0.3%. So this isn't necessarily as dramatic as we, wow, that does look pretty dramatic. Wow. Wow. Okay, so yeah, there you go. This could be a dead cat bounce performing. That's definitely a possibility. Let me go into the patternsite.com and we'll look at the vertical rundown page. Yes, the chart patterns are everything. So I'm going to blow this up just a little bit so we can talk about this. Vertical run down. There is a strong chance of well, I call it a bear trap, right? But when the price drops that dramatically that fast, the chances of rebound are just so great. So what do we have? We have a 46% of a full retrace. This is, of course, barring that we aren't going into like complete market crisis mode. Bulkowski says that after a vertical run ends, price continues to climb 46% of the time, completely retracing the drop suffered in the vertical run. The median midway retrace is 81%. Half of the time, price will retrace more and half will retrace less. Most of the time, that is to say 84% of the time, the stock will retrace at least a portion of the move down. The other 16% sees price continue dropping, but at a slower pace. Trading tips. So here we go. What does Bulkowski say for day traders? On the retrace, he says, after bar 4, meaning a vertical run down has been established, place a buy stop a penny or two above the high of the prior price bar. Okay. Trail it lower by placing the stop a penny or two above the high of the prior bar. Never raise the buy stop. When the turn occurs, set a target that is half the distance up the vertical run. This should work 64% of the time. Okay, that's not like the best, but that's all right. He gives us an example here. I would really encourage everyone to go through and just read this page on the vertical run down. I'm going to do a little bit of analysis here. Let's go to SPX, or let's go to SPY. I've got candles turned on right now. I'm going to clear off these drawings here. Clear drawing set. Yep, let's do it. Let's see what we got. Pull this over where you can see it, and we'll pull this down. That's looking pretty vertical run downy to me. I'm going to go ahead and pull up the chat again here so I can see what y'all are saying. You need a cigar. I do need a cigar. Damn straight, I need a cigar. I want like a cannabis cigar, like wrapped in hemp. That's what I really want. I don't think YouTube would be down for that though. With a bear trap, yeah, dude. I'm thinking bounce. We're gonna at least bounce, right? we're just going to see a volatile range for a few more months. Yeah, so we can talk about the expectations for what's going on here in SPY, because it is pretty brutal. It really is. I think that we're going to have a good time. It's going to be there's going to be a lot of opportunity to make money and a lot of opportunity to lose money. So I'm going to be trying to be very careful. Let's review the vertical rundown, because we're probably going to see a gap up, right? And that might just be a retrace, a wave 4 in a larger 5-wave pattern that sets a new low before we actually reverse this trend and start heading higher. For the time being, let's have a look here. So vertical rundown, price moves down in a steep drop for at least 4 sessions. 1, 2, 3, 4, 5. We definitely have the 4 sessions here. He says that typically there might be a flag. Price can pause along the vertical run, occasionally multiple times. He calls these flags. It happens 6% of the time. So that's what we're looking at on March 8th. This is that flag. Big dump, big dump. And these volume bars are just insane, right? Surprisingly, the RSI hasn't reached oversold yet. But that is that's a scary bar. So he says median retrace 80%. So let's just do this. Let's just get a simple Fibonacci retracement tool going out here, and I'm gonna edit this guy. Maybe you can't see this dialog box. I'm just gonna put down some Fibonacci retracements. That 50 is really where we're trying to go, so I'm gonna have that pulled up. I'm gonna extend this thing to the right, and there you go. So Mr. Bulkowski would recommend placing a buy order above this candle, just a few pennies though, and don't change it. And then ride the price up with a trailing stop. That would bring the price back up to 398.61. So with Bulkowski's chart pattern analysis, yeah, we would be saying this might be a little bit of a trap. Who knows if we get a full reversal or not, because it's very possible more banks start to go under. There's a lot of news. We got CPI data coming on, so yeah, we're going to have a lot to look at in the near term. I'm going to zoom into a 15-minute chart. I wanted to analyze this because the other day I was thinking this was only a 3-wave pattern, but we have definitely established that it's going to be much, much more than that. And I'm going to just have a peek here. Looks like we don't have, this doesn't show the rally in futures. That's okay. Let's see here. Does that work? Can we get this going? There we go. This will be better. Obi-Wan would be proud of me for looking at the futures. I don't always look at futures, but I really should. I should more. Show contract change events. Turn that off. Get that green thing out of there. Okay, so now we've got a nice downtrend shown here. I'm going to need to pull this over a little bit further, it looks like. Maybe right there. Is that a good spot? Maybe a little further over. I'm trying to learn how far I need to have the chart pull over on my screen so you can see all this other stuff on the side, you know? It's kind of a learning curve for me, guys. I'm not used to streaming live so much. Let's analyze this downtrend because it's a beast. It is a beast. Okay. And can I get more price range on the right side? So time axis, give me more bars to the right. Give me as many bars. This value is too high. Okay, you can only do 1,000 to the right? Really? So you're gonna make me change my time frame, huh? That's fine. I'll just check here on the screen. That looks like it's gonna work. Okay, so let's see here. I'm just gonna start labeling things here, and we're gonna start on, I don't know, the minute degree, because that gives me plenty of room to adjust and write extensions. So I wanna do that. I like to use the capital O when I'm using the lowercase Roman numerals here at this degree. Color this one white. Okay, this would be our first impulse wave for 1. 2 would be sideways. Duplicate this guy, call it 2. And I'm going to try to figure out how Mr. Bulkowski's vertical rundown bounce analysis would fit into our motive wave count, because that could be very good, right? Very good. Hey man, if you were trading AMC right now, would you be looking to get out before RS, or would you just hold out and see what happens? No, you're fine, dude. Ask all the questions you want. Like, full disclosure, I'm actually holding a couple of AMC calls right now. That's just FOMO. Just FOMO. I wanted to pull something else up too. Check this out. I went ahead and I looked up security brokers, dealers, margin accounts at broken dealers. I'm watching margin, right? Margin tends to drop in financial crises, and this sends prices spiraling down as long positions are just sold in order to raise liquidity for the prime brokers that lend out the capital is margin. And we do have a massive decline right now. Boom! Huge decline between quarter 3 and quarter 4 of 2022. I expect to see this continue. And the truth is if there are short positions that are based on margin, then well, their margin calls would lead to a lot of buying, right? So yeah, I'm holding a couple calls. It's just FOMO. It's just FOMO. Actually, I think I want to leave that one up. And that's probably a good thing to keep open. It's a matter of perspective, right? Oh, yeah, I know, Trader Sauce. I know. All right, so let's start considering this motive wave count again, because I think it's important to understand the context of the price action. We are looking for a channel typically when we're looking at a motive wave, and we just don't have like a good channel. We really don't. And that's why I'm still like wary of a bounce, is because this looks more like a broadening pattern to me, right? Check that out. In fact, let me just reduce this a little bit. And I wouldn't call this the first touch point. If I did though, A, B, see we got 2 here, 2 consecutive touches along that trend line. So let's just call it right there. Let's just say this is our pattern, and we'll say 1, 2, 3, 4, 5 would be up here. Maybe we overthrow and go down after that, but this looks kind of corrective-y to me, especially through here, right? Here's another instance where it just looks like a 3-wave form to me, right? A, B, and C. Do you see that zigzag? To me, that doesn't scream motive. It screams corrective. When you do have those stacks of 3 waves pointing one direction, it typically tends to signal that that trend is coming to an end soon. So that wasn't the case here. Nope. And we actually had this really awkward grind. This would be that flag, right? And again, look, another broadening pattern. It's so peculiar. It's so peculiar what these patterns do to the price. And the mentality through these patterns is ridiculous. Big volume spike here, touching that bottom trend line, bouncing up, pushing the price higher. And again, sideways we go until suddenly there's a breakout and the price just collapses down. And it's like a straight run, right? There's nothing in here that even makes me think 1, 2, 3, 4, 5. Maybe like right here. Maybe right here we can say like 1, and then maybe this is 2. Maybe. And perhaps we can suppose that we have 3, 4, and 5 is somewhere down here. And then a corrective move, A, B, and C. A, maybe B and C. And now, look, futures are pushing up a lot. There's a big gap here too. Isn't that curious? What this is going to do is this is going to burn all those puts that people held overnight over the weekend. See, I don't do that. I'm kind of in and out in a day. I don't really hold positions very long anymore. Market's too volatile for my taste. I like to get in and out in just a few minutes. I don't want to hold. I want to take my money and run. RSI is now reaching overbought. This is when the price or the RSI comes over 70. It's setting a higher high from the prior peaks. This is good. This very well could mark the beginning of a new motive wave. In fact, maybe what we do is we can just like follow this chart on the minute time degree. Try to do some like live analysis on this. It's very interesting to see such a large rebound, and the volume isn't like, I mean, that's higher than it has been in the past in after hours. Implied volatility right now is responding positively to that price pushing higher. I'm thinking that's because the price is below or outside of a certain range, and as long as the price is there, it's going to rise, and once the price gets back above there, it's going to change. It'll flop the correlation. Looking on the 1 minute chart now, let's have a look here. It looks like we have some pipe tops. 1, 2, 3. Yes. Okay, so I'm just gonna start doing some extensions here, and we'll try to get an idea of what's going on. So when I have a wave 3 and a motive wave, I always want to make sure that it's taller than the first wave, because if it's not taller than the first wave, then I'm not gonna have a whole lot of faith in the progression of the 5th wave being setting a new high. Or probably looking at some sort of angular triangle. Here we did barely get a close, and we have these pipe tops right here. These pipe tops typically are a reliable indicator of reversal. I'm going to go ahead and point that thing down. But if we get support here at this 39.44 level, yes, we could be thinking new motive wave. On this time frame, you're going to notice that the RSI was extremely overbought, reaching 95 off of the open, coming down now, and we're setting a bearish divergence in the RSI. So I'm going to connect these two peaks, and there's like a downtrend through here. I'm going to go ahead and label that, put down my dotted trend line, and I'm going to go ahead and just shrink down the implied volatility. I don't really need that right now. I don't think it's very valuable while we're at such price extremes. I'm going to blow volume up too. Volume is relative. You can see this yellow line coming through my volume indicator. This is a 30-period average, so on this time frame, that'd be 30 minutes. When the price rises, sets a new high, it'll break this RSI downtrend, and that probably is going to signal a new motive wave heading higher. And that makes sense to me. Let's have a couple of different volume indicators up. So I'm going to take out the volume subgraph. There we go. That'll look a little better. And yes. So what am I looking for here in the futures? I'm gonna start connecting peaks and valleys, and we might reveal that we're in a narrowing price trend, which isn't very encouraging. It's not. When the price trends narrow like that, a good signal that we're losing steam on the way up. After all, after coming off a big low like this, I'm really looking for A, B, and C rather than 1, 2, 3, 4, 5. The first wave of that A is motive, and it may take on a triangle shape like this. So we'll keep an eye on this, and we'll check back later. If I were to be trading this, I'd be watching the uptrend very carefully. Going to start that uptrend. We'll come back to this throughout the stream. If this is indeed going to be 1, 2, 3, 4, 5 heading higher, I'm just going to start labeling that. Sometimes I do this during the trading day too. 1, 2, and this may be 1 of 3. So we're going to go ahead and we're just going to start on the minute degree. And when it's not that like we're truly on what would be the minute degree in my analysis. It's just a good degree to start on so that I can show subwaves, the subwaves. So I'm going to call it minute wave. What? Oops. No, don't edit the rectangle. It looks like we aren't coming back to that gap fill, though. It looks like that might be a breakaway gap. We're leaving that there. Okay. If this is indeed the first wave of a 3-wave, the third wave is probably extended. So Frost and Pretcher advised to just start labeling that third wave extension. So for me, that means the color blue because that's the degree color below white. There we are. And so we would have edit properties. That's actually going to be 1 of 5. I'm going to duplicate this. This would be 2 of 5. Does that make a nice flag too, I wonder? That looks quite flaggy to me through here. You can see these closes. Let's see. Yeah, that's looking flag-esque. Yes, it is. Going to color that one blue. When I make these flags, I like to try to color them the same. How can I join your Discord? Okay, so I'll just drop a Discord link here in the chat. Fight people. I know the one I have up isn't like the best, but I kind of like it that way. That's because I don't want everybody fighting me necessarily. But futures are ripping. Interesting. Maybe I should put a... Let me just do this really quick. How can I join your Discord? All right, there you go. There's a Discord link in the chat. And I know, right? I'm going to go, everyone. Hey, I'm live right now. If you want to hang out. Watching futures. And we will be going over AMC stuff as soon as anybody asks. So just bear that in mind. Okay. Yeah, we got thumbs up. We got thumbs up from BW. Cool. Hey, thank you, Stockhead Edward Smith, for the $1. I appreciate it. Yeah, working weekends now. Dude, this is what I want to do for a living. Honestly, I love looking at charts. It's more fun than what I really do for work. I absolutely am. I am enamored with the markets. That's all there is to it. I'm enamored with the markets. I love hanging out with everybody. It's a great time, you know. I like to watch you guys make money. I'm not necessarily the best trader, but you know, like Obi-Wan was killing it. You guys see what Obi-Wan was doing? Like, holy cow, he's like posting 600% gains. Okay, there's the AMC question. So we'll come back and we'll check on this potential motive wave count and a corrective ABC heading higher in the futures. It looks like we may be finding ourselves about to break this uptrend from the open, in which case we'll be on the watch for gap fill. Price is beginning to sink as volume decreases. The RSI trend is still holding. We'll look at AMC now and we'll come back. Yeah, dude, Obi-Wan is like, I'm like, dude, you need to make a YouTube, dude, so I can follow you. All right, so AMC. Yes, here we are. Is Stevie here? Stevie, here's you. Did you guys know if you comment first on my videos, and you actually are first, I'll put you on a chart. I will. And I used to do that on this default chart. Let me zoom out a little bit here onto the, Brian Carpenter, he was first a lot. Tim Sketchy was first a lot. There's Stock Ed, Edward Smith. This guy, he's always there. He's like one of my mods. Probably one of the, he has a behavioral analyst form of analysis, but I don't see anybody else doing, so it's probably more unique analysis, and I enjoy it. I really do. It's fun watching other people's analytical styles. I think Stock Ed was the first one who started like cleaning up his charts, making a really solid presentation with them. Ah, yes, my true love, Amy. I am still favoring a high and tight flag analysis on AMC, even though it's clearly formed a head and shoulder top here. The volume's decreasing through here, which is, it's good, right? Yeah, so let's just do a little quick head and shoulder here. See what we got. And I like to use the Fibonacci extension tool, and we'll use Wix. Why not? We'll apply it to the breakout price, and then I'm going to need to make it a negative 100% extension because the extension tool is placed upside down. So there we go. So the price target for this head and shoulder top is, where is it? Oh, whoops. Oh, it was facing the right way. It was facing the right way. Don't make it negative. Whoops. Sometimes I do it backwards. Okay. 352. Holy cow. Of course, getting to 352 would be devastating to the uptrend because that is still in play. AMC is still in an uptrend. I decided that whenever AMC is actually in like a decently sized uptrend, like here it's several months, I'm just gonna like be flipping bullish on it and holding a bullish analysis until the uptrend breaks, and then I'll flip. So it'll be like back and forth, back and forth, back and forth. Just wanted to stop and say hi. No MC for me, LOL. See you bright and early. Time doesn't change for me in Arizona, so I get up early tomorrow. All right, Ryan Clark. You have a good night, man. We'll see you bright and early tomorrow at open. Maybe at open. Maybe not at open, but I can see that happening if Ape rips at the same time. I don't even like look at Ape hardly. Let's have a look at Ape real quick. Wow. Ape's having a rough go of it, isn't it? Big, strong downtrend through here. We just set a new low, so there we are. Go ahead and label that. And it's definitely moving down in a channel, isn't it? 1, 2, 3, 4. Working on that fifth wave, which is to say maybe we find an end to the downside soon. The RSI is moving through oversold pretty deeply through there. Got a little volume spike, it seems. This could potentially be a good spot to find a bottom, but I wouldn't be too optimistic about it. It is Ape, so I'm thinking after this massive fall, we have A, B, and C. Motive wave heading down, you say? Motive wave heading down. That would imply bottom hunting, right? That means the overall trend is still down. Even though price is higher than it was, the prevailing trend is still going to be down. When I zoom out onto a daily time frame, that makes me think that our downtrend is still intact through here, even though the low is back here. So like the real downtrend, the confirmed downtrend we had broke, right? This one broke. But that doesn't mean necessarily that we're going to have like a big uptrend. And seeing this motive wave through here, that tells me we're probably still correcting down. 1, 2, 3, 4, working on 5. And we can actually do some analysis here too. The first wave in a correction, A, is also motive. So it's possible we're looking for A. And I kind of drew my chart like this a while ago. B might come up and test where that new downtrend will appear. And then we'll be looking for the measure rule on a zigzag, I think. We'll use the wicks here. And we're just going to guess where that low is going to be. Where do I think? I'm going to use the first wave down in this downtrend to establish what that amplitude may be. And I'm going to apply it just to that peak. And wow. Ouch. Okay, that's 88 cents. So when we get this low, it gets hard to do that because we're going to start looking at percentage gains, like relativity. So like 30%. 30% drop from like 19. That's kind of odd, but we'll just say like 60 cents. So like 130 right here. Look at that. There's support right there. Okay, so that's going to be a better area of support here. So we're going to be saying support. This is the probable end of this motive wave. That's still really low. Ouch. Yeah. And then B wave tends to come up 23.6% of the move down. So I'm going to do this. I want to say if that is the move down, I want to just turn on this and its inverse just in case. B might be somewhere up here towards 167. And then we'll come in for our final downtrend. What that will do is it will create for us a double 3 pattern. A, B, and C, A, B, and C. And after those 2 3s comes a 5 that heads higher. This is typically where the meme stocks like to rally the most, is in C wave. Because it's motive, and it can extend. It's not really like, it's only supposed to be as long as the wave that preceded it, but last motive wave, that is, A. Here, I'm not really sure what that would mean because it's the first corrective phase we found after this motive dump. I mean, significant corrective phase. Make a big price mountain. Big head and shoulder top through here. Who knows? Oh, yeah. If AMC can pay off their debt, that'd be really great. I would have a lot more hope for AMC. I was thinking about seeing a movie. You know, I'm still like subscribed to the AMC stubs. And I don't go. I should go. Conversion plus reverse split will change the charts once again. Yeah, reverse splits. Ugh. Very annoying. So let's talk about this count really quick, because I'm thinking that we could just be, this is 1 or A, this peak through here, and we're coming down in another 3-wave form. And again, 455 is a pretty dramatic drop off of 8. So I wonder if this is going to be another percentage relation less than a 1-to-1 relationship. If that's the case, what is this, $9? $8.50 to $5.90. What is that? Let's see here. $8.50, $5.90. Was that like a 64% drop? What's 64% off of like $6.50? Let's see here. Where'd my calculator go? Come on, Microsoft Windows. There we go. 650 by 0.64. What do you got? 416. I mean, that's right near that 455 target. So that's, ouch. If this is actually a true zigzag, then yeah, going down for 450. And unsurprisingly, look at that. We've got support right there on this candle. Right there. So, I mean, all the analysis is pointing towards a further decline here. Down to that level. Yes, indeed it does. Indeed it does. Brutal. Brutal. I wonder what that would do for the price in terms of patterns. See, this is looking like ape. 1, 2, 3. Big push down. We haven't seen this in ape where we have like a new high set. 1, 2, 3. This could be like X. This could be 1, 2, 3. This could be Y. 1, 2, 3. And then we finally end our correction phase way down here. And then we can start seeing the next motive wave up, and perhaps we even start to establish some sort of broadening pattern. And it's so hard. The markets are so hard to read right now. But yeah, this low, it's kind of looking channely. And see, the channely nature of it also makes me think like possible motive wave. If that is the case, this could be 1, 2. See, I have that labeled as 2 on the minute wave. So very possible that a third wave, a three wave follows. It'd be a strong three wave. It would be. And maybe that's what we're looking for. Maybe margin calls can drive closing of some shorts to push the price up like that. Implied volatility is still coming down, so this is indeed corrective. Still in a corrective phase. Yeah, big volume spike and kabush, 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 kabush. I was saying the other day, AMC finds these big green bars, and that's typically when it dumps right after that. I really hope your court case or the court case does something. I think that's our only chance at having a RS. That's a dump in my books. Yeah, that's a dump. Yeah, AMC, it's having a rough go of it. We can zoom in too, and it's just such a clean channel too. Such a clean channel. In fact, I bet you could trade that channel if you really wanted to. We're just going to connect some of these highs with a channel tool through here. I'm going to try to use the closes, cut out as many wicks as I can, and use the height of this first move to define it. Yeah, sure enough, there you go. This is probably 1, 2, 3, 4, 5, A, B, C. This is X wave 3, 4, 1, 2. We're starting a third wave extension. But hey, look, that channel is breaking right at the end of the session, right? If that zigzag doesn't play out, that's like really bullish. If the zigzag doesn't complete its dive, that's huge. I can't like guarantee that's a thing, but it'd be nice to see the price reverse because I really do want people to be making money. I know a lot of people lost a lot of money. I sold at 26 initially like back here, but again, when it was at 26 and the hype crowd was going crazy, I am not a hype crowd person. I'm really not. So if I'm feeling like I need to hold calls, something could be coming up. I don't know. Looks like a complex inverted head and shoulder kind of through here, doesn't it? Let me delete some of this stuff. And I actually don't prefer to look at candles. I think the green and reds forms a lot of bias. But yeah, right here, see, this could easily be a head and shoulder, right? Like left shoulder. Kaboom. And we'll duplicate that. We'll come over here and we'll say right shoulder. Yeah, and that'd be a head, and our neckline would be right here. But having broken out, confirmed a breakout, turning down is never good. Might be complex. Maybe we have another left shoulder. Oh, did I write right shoulder? That's kind of funny. Let's not do that. Let's see here. Right shoulder. It could just be another shoulder right here. Really, you want to see some symmetry in the price of those shoulders, so that's not too bad. The right shoulder is dipping a little bit. That's okay. And these head and shoulder patterns, rising volume through them is good. That's probably what I'm looking at right here. It feels like volume's going up, doesn't it? And we don't want the right shoulder to extend, and I don't think it does extend. I'm going to do a little time analysis here. This would be like, what, 83 days to there? What is it to here? 67. What is 83 days? 83 days puts us out to here, which is like the end of March. So very possible there is that head and shoulders. And as I do that, you're going to notice right away that it's like, or triangle, right? Or triangle, which I'm calling the most annoying chart pattern ever. 5, 3, 5. Alternating 5s and 3s in a triangle. It's an interesting thing. It's a very interesting thing. When you see that pattern heading down, it's an ending diagonal. It ends at the end of a downturn. Here it's occurring in a symmetrical triangle. Like again, I think there's still a case here for AMC to push higher. It's not the end of the world. It's really not. I really hope AMC can raise some money. I'm personally in favor of dilution. I don't think it's okay to try to stop a company from raising money because you want a short squeeze. I think it's better to have the company perform well. The fundamentals, improving fundamentals are what scare off shorts, right? Thank you, Stockhead, yet again, $5. There we are. I'm here to the unexpected AMC. What type of call would you be looking at? I picked up some $8 April calls. Okay, so let's talk call options. Call options. If you're... It just depends. Like, personally, I think I'm holding like 650. I'm holding a 650. I think it's a April. I can't remember what date, but yeah, it's out of the money. Whenever you buy a call option that's out of the money, as time goes on, your value will drop as the price remains below the strike. And it's important to watch implied volatility, because if implied volatility is dropping while you're holding out of the money options, then your options are going to plummet in value. Absolutely. And what you're actually chasing is the intrinsic value of the contract. And to get that value, you're going to have that rally. So, what I did with Playboy is I bought 100 shares and then I sold a leap on it. I sold a covered call on my Playboy shares. And what that did is it gave me some premium, and that premium hedges the value of my shares. Well, I can take some of that premium and I can increase my exposure to the stock price by buying some nearer term expiry short calls, or not short calls, but calls. And so that's what I did. And I do it that way because if the price actually doesn't rise and my calls expire worthless, then I still have some cash left over from the premium that hedges the downside in the shares. But just buying calls out of the money is very risky, very, very risky. Yeah. So if I were to buy, like, seriously, if I were looking to invest in AMC, I'd be buying like a year out and deep in the money, personally. And then as long as price is above the price is above your strike, then your option should be increasing in value. It's not always true, right? There's a lot of considerations. There's a lot of Greeks, and so the shares, or the value of those contracts, can fluctuate a lot. Yeah, because the majority of the value of an in the money call is going to be intrinsic value, and you don't lose that over time. If implied volatility is super low like it is right now, and price begins to rise, and then implied volatility rises with it, then in addition to the intrinsic value on that in the money call, you're also going to capture extrinsic value, which is going to be from the implied volatility, the chance that the strike ends much higher than, or the price is much higher than the strike at expiration, which equates to risk on the part of the writer of the contract, whoever sold the contract. So just try to think of it in those terms. With options, you really get what you pay for. It's like, if you want nice things, you gotta pay money. One time, you got it. I love talking options. Options are, people say they're complicated, and I understand that they're complicated, but they're also like not that complicated. I like to talk about them in terms of like coupons. Like, if in 2005 you bought a coupon to buy gas at, I don't know, you remember when gas prices went crazy? They went like above $5 a gallon for a long time way back then. If you were holding a coupon to buy gas at like $1 a gallon, you'd be like rolling in the dough, right? You could sell those coupons for a profit. And that's just like a good analogy for how options work. The $7 June calls. $7 June calls out of the money, but maybe far enough in the future to actually stage a rally, and maybe not too far out of the money to necessarily expire worthless if we do get an uptrend. But again, $7 is out of the money. There's significant support and resistance there at $7, that's for sure. So if this uptrend holds and this inverted head and shoulder plays out, then yeah, those $7 June options will do well. But I'd be very cautious. Be very, very cautious. And there will probably be a point in time where your max profit would. So let's just do a thing. Let's say, and I have made so many mistakes trading options. It's hilarious. I have paid the cost of the education, and it hurts to think about sometimes. So wait, I want this to be at $7. $7, please. So if this is your strike. There we go. All right. You're out of the money, right? So you need a rally. Implied volatility is coming down still. And maybe we can figure out at what price level implied volatility is rising. So it was rising, it rose until right here when the price hit 650-ish. It peaked and it didn't fall. See, that's just it. This is what's interesting to me is there was this big dive, but implied volatility didn't fall. And the price rebounded. And then it starts to fall. It's like, okay, so the price action through that range drives volatility down. You're probably going to need to get the strike above, or the price above that strike before we start seeing implied volatility rise. That might be a good strike to take advantage of rising implied volatility in a rally. But again, I wouldn't hold it for too long, because eventually your implied volatility will start to drop and the value of the contract may decrease unless it goes deep in the money. See, it's all balance, right? It's like, it'll be great until price retraces and then implied volatility drops. But also, if your contract's for far enough out, then the certainty of it expiring in the money is still is increasing still. So the value of the contract might go up, even though implied volatility. So there might be this like negative divergence between implied volatility and the price of your contract in a call if it's in the money. But that's only, under certain conditions. It's just like a lot to think about. Something you can do in Thinkorswim is do like risk studies and probabilities of options expiring in the money, and it's pretty cool. Wizard says, just expecting a run up when conversion takes place mid-April. Yeah, I don't follow much about the conversion and such, but I think the dilution of the shares, the ability to dilute the shares, will improve the fundamental of the company. But yeah, we're gonna have to see if consumer discretionary spending can increase, right? So it's gonna be a wild ride. It's going to be a wild, wild ride. Let's hop into a tighter time frame here. I've been kind of keeping an eye on the price, and during normal market hours, it's just getting really grindy, like really grindy. Some of these bars is just like straight up barcoding. It's starting to behave like a penny stock. This is what penny stocks do. This is what those charts look like. So it's telling me that I'm thinking retail interest might be waning. And that happened once before. It did way back here. Let's do this. Let me just extend these two price ranges to the left. I mean, these are important price ranges, right? You can see there's a lot of resistance and support right here. But really what I was thinking is this range through here. I remember how bad it felt to be holding AMC back here. You know what? Let me turn on my trades. Okay, so there you go. Here are my a lot of hopium. Yeah, a lot of hopium. So yeah, I was buying a lot of AMC in 2021, and it got the most tedious right before this big run up. And I loaded up. I was like, hell yeah. I didn't care. I was just buying. I was slapping that ass, as Straight likes to say. Okay, Tesla. Yeah, I can definitely go to Tesla. Closing thought on AMC is that typically when it feels the worst, it's about to that's right before something big happens. And then I will never forget this. I will never forget that. That wrecked my brain. Okay, Tesla. Let's zoom in a little bit. Let's go to the 15-minute chart. And what do we got here? So, yes. Because Tesla was dropping, right? And it kind of caught me off guard. I could do some more analysis through here. I was thinking we had wave 3, and then a motive down for A, corrective up for B, motive down for C occurring in this diagonal through here. And that seems to have been the first 3-wave pattern in a larger zigzag heading down. So this might have been like X through here. And then boom, A, B, and C. That full target would have been 175. So the price surpasses it a little bit, which, tends to be the case. Implied volatility picking up right here as price passes that 100% mark. And now we see ourselves somewhere in a bounce, right? I'm going to zoom in on this bad boy. Because diamonds can go either way, and that's what this looks like to me is a diamond. Never trust a diamond for a breakout, up or down. It's going to do whatever it's going to do. Half the time I feel like it's a continuation. The other half, it's a reversal. Here, I'm favoring reversal. We don't have much of a confirmed uptrend. It looks like the price is setting higher lows, also lower highs. Maybe we even try to figure out if we have some sort of a triangle forming through here, a pennant. Doesn't really look like it to me, but I think overall it makes sense that the price be pushing a little lower than I want it to. It is, after all, about to go into the final impulse, I think, of its motive wave, which started back in 2022 or 2023. Yeah, again, 1, 2, 3, and this looks like 4, and wave 5 would characteristically be similar to wave 1 here. Wave 4 likes to come down to about that 61.8% retracement level, right? Let's see here. So if I just take this down, just kind of like eyeball it, what is that? 171.79. Let me extend that to the right. Whoops. That would be the left. Let me cancel left extension. Cancel left extension. I mean, look, that's right there, right? So let me just make this more exact. And again, I'm going to turn off candles because I don't like candles so much. I think candles form bias because of colors. So I like everything to be purple here. We'll take this off to the side. Whoops. Take this off to the side. Kind of magnetize that to the beginning of the uptrend. And yeah, look at that, 174.02. I think that's right. Let me check the book. Let me check the book. Let me pull this over to the left here so you can see that. I'm trying to keep the. I'm practicing the stuff here with the. Let me show the name on the left. On the left, please. Okay, there we go. There's your 61.8%. So I'm looking on page 137 here. Wave 4 tends to be 0.382 of wave 3. Okay, so yeah, I'm gonna need to remeasure that. Of course, there's like a diagram in here which is super helpful. Let's see, just doing a little count here in my head. Okay, so let's measure the height of what I have measured as wave 3 here. I have wave 3 starting near 125, peaking out near 212. Do get a calculator. 212 minus, what was that, 125-ish? Okay. I'm going to multiply that by, what was it again? Was that 0.382? I think it was. 0.382. It's like $33. So I'm going to subtract that from that high, which I'm going to take from here, actually, from 212. What do we get? 178. 178.66. That's very, very close to where we were already looking. Let me just edit properties here. 178. So proportionally, I think that it makes sense that we're seeing something of a reversal pattern establishing around that price trend, and implied volatility starting to tick up now, right? Just as the price begins to come up off that extreme low. Again, I'm still expecting one push higher. Yeah, I'm still expecting one push higher. And if we get a dead cat bounce in the financial sector, yeah, SPY could rally too. And while my overall bear market target is like super low, what did I put it at, like 320 in my last video? I think it's going to take us a long time to get there. If we crash to it, that's one thing, but really I kind of expect it to take a little longer. So those are my thoughts on Tesla, is that yes, this dropped a lot, but I was also, here's the real thing. This is very real. The analysis that I produce can only be as accurate as my understanding is. And so that's why I'm always trying to study and learn more. What I did over this last weekend is I digested a ton more information from that book. I just really got into it, and I still need to get into it even more. It's going to be amazing. I'm going to digest everything in this book, and then I'm going to make a massive video about it. And I'm working on this. It's in the works. I'm going to take the Fibonacci spirals. I'm going to take the Fibonacci time studies that are in there. I'm going to apply them in a grand scale. What I'm going to try to do is unlock the larger pattern, which I am already assuming leads to like a renaissance. I know. I'm the bear. Everything sucks. I know. And yes, I'm forecasting a lot of downside for a long time. But I think on the other side of this comes the renaissance. It'll be a new age. It'll be beautiful. Humanity will heal and we will move forward. But anyway, I'm going to try to establish the Fibonacci analysis to prove that thesis, or to not prove it, but validate it. So anyway, so I digested a bunch of information about the wave relationships, and that's like the way each wave relates to each other in terms of size, amplitude, and characteristically as well. Trying to find the sideways and sharp corrections, and how waves behave prior or after two wave extensions. There's so much information there. And so when I started forecasting this downtrend in Tesla, I was overly optimistic because I didn't quite understand yet that wave 4 would be that 0.382 of the wave 3. And now when I do that, I see, hey, we've definitely reached that low. So I'm thinking my analysis was good but early, and that's kind of like the theme of my whole that's like what I do, right? It's like I'm rarely totally wrong. I'm usually just a little early. So I'm trying to work on that. Thank you, Serhi. Yeah. You're holding some calls. Cool, man. Yeah, you do you. I would honestly, based on if I were to trade my analysis and put my money where my mouth was, I would be buying Tesla calls too. I would be. And I would, and I would if I had money to, but I don't. And I'll super cycle. Yes, tube legit. Yes, super cycle. And actually on my SPX count, I think I'm labeling it as that would be the grand super cycle. And I kind of like that I changed the cycles to make the grand super cycle. I'll call it the renaissance of the grand super cycle. When humanity will heal, we will progress into the stars and conquer the universe. I don't know. Okay, so let's talk about putting my money where my mouth is. I recently bought some calls. Not calls. I'm just thinking about calls. Got calls on the brain. Calls on the brain, big time. But GLD, I actually bought some gold this weekend. I do that when I panic. I buy gold. It makes me feel better. I really like the shiny stuff. This is incredible. Look at this massive surge, right? And this wasn't even like recently. Let me go up here into my browser and let's look at kitco.com. You're going to see this. It's kind of small. It's just in the upper right corner of your screen. If you're on mobile, I'll zoom in for you a little bit. We saw gold open quite strongly, forming a high and tight flag, correcting down. It looks like there might be one more little push down here in spot price, but we're up 1% for the week, just opening strong, especially after surging. You can see that we have a blue, red, and green line. We have March 9th, 10th, 12th, respectively. And there's been a surge here as the New York NYMEX market opens. We are now seeing that on the Globex as well. Sydney here seeming to be buying that dip. Hong Kong will open shortly, and I expect to see more upside there as well. When we zoom down and we look at these other charts, the 30-day gold chart, you're going to see that we're above this intermediate peak, right? That looks like a double bottom, doesn't it? And when I come over here, the incoming trend for that double bottom is really long. It's really long. This could be A, B, and C, though, of a correction wave when we're dump. I do acknowledge that, but my gut says no. My gut says probably going to reverse. As you know, I'm very bullish, and I've been saying that this is a buying opportunity. So yes, I went ahead and bought some gold because I like to trade my analysis. If I am vlogging and people are influenced by that, then I want to feel what my viewership is feeling. I want to understand. So anyway, I just like gold. I'll look for any excuse to buy gold. I really will. Stevie, hi Cap. Just tuned in. Did I miss the AMC? Yeah, but we'll go back. We'll go back, Stevie. Absolutely. Let's see. Does anybody else want anything to look at before we go back to AMC? Because, I'm happy to just open the charts up. I'll be here for a while until I start losing my voice, or until I lose focus. Cheers. Okay, let's go back to AMC. Let's do it. Oh, TRKA. Okay, really quick, Wizard. TRKA. Stay tuned, Stevie. Stay tuned. TRKA. Wow. Whoop. Nasty dive there. Jeez. Let me go into the daily chart. Tasty. Tasty, tasty. What is this? Troika Media? That downtrend's gonna take a long time to break, probably. Let me just. And we got that big volume surge. Love volume surges. That downtrend broke hardcore. Just gonna do a quick trend line study here and maybe start a small chart pattern analysis, right? And we'll just start labeling stuff here. So I'm just gonna say A, B, C, whoops, D, and E. So what I just did there is I just drew a descending broadening wedge, and point E typically overthrows that upper trend line, which is defined by this downtrend. As you can see, we did get that pull up, and so at this point, what we're going to be looking for is support at prior peaks and valleys, because we've probably completed a motive wave heading lower and we're correcting up in an ABC fashion. And when I see the RSI hitting overbought like this a couple of different times, boom, 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 this tells me that this is probably 1, 2, and 3. I'm just going to go ahead and start labeling that. I'm just going to do sub-mini wet waves because this is going to be quick. That's probably 1 and 3. I bet you that's probably like of 5. This is probably 4 and 5. Let's see here. I'm thinking, sheesh, I'm lost in my fractals. It gets hard. It gets hard. Let's zoom into the hourly time frame. This will be a little easier here to see these wave relationships. So I'm just going to start saying that we have a correction higher, another correction. So I'm going to say that our motive mode probably begins right here towards 11 cents and starts heading higher. I'm going to draw the uptrend from here. That would be the right place to do it. That connects those valleys. Going to put that uptrend down and start connecting peaks. Let's connect these peaks. Look, now we have an ascending broadening wedge. And the breakout here is pretty bearish, but I wouldn't fear yet, not unless this zigzag is as brutal as it looks, which it may be. Let's see. Okay, so 100% takes us to a negative target, so we're going to ignore that. 1, 2, 3. This is probably the zigzag through here. 1, 2, 3. That's still a negative target, so we're going to ignore that too. Interesting. So what do we got? This definitely has a 3-wave form to it, and I'm just going to start trying to find some sort of diagonal through here. Interesting. This is a confusing one. 1, 2, 3. 1, 2, 3. Yes. Okay. So, geez. Okay, here we go. We're gonna say ABC, ABC. 1, 2, 1, 2, 3. We're looking for 4 and 5. Okay. And what that's gonna do is that's going to establish 1, 2, 3. 1, 2, 1, 2, 3, 1, 2, 3, 1, 2. That's going to establish a 3, 3, 5. And bear with me here. Bear with me here. That's too steep. I don't like to use the middle of a trend like that. Okay, that would be my best guess. That would be my best guess. That's like a bottoming pattern that would be occurring over that uptrend, because the price is likely to pull up, and it's likely to pull up and at least test that uptrend before it heads lower. And then if we are in some sort of diagonal, A, B, C, maybe this is D actually, and then E overthrows, and then we'll talk. We don't really know how high or how low we're gonna go, but I'd be looking for this to be trying to bottom. There's decreasing volume in the downtrend, which is always good. It looks like we're trading at a lower price than the prior valley in the RSI, while the RSI has yet to set a new low. So that to me signals some bullish divergence. So without knowing anything about the company and seeing these downtrends, I want to say that I want to tell you, but I cannot make any guarantees that this isn't a massive measured move up, and we're probably looking for 92 cents towards $1, which means a test of this uptrend. See that? That's nice. When you can put a couple downtrends down and you analyze the price, and you can start putting the extensions down. The extensions start to support testing of other known levels like this is good stuff. And something else I'm gonna do really quickly is I'm gonna take this time frame, and we're just gonna suppose that we're near there, and there you go. See, that length of time leads us right there to that level. So yeah, I mean, to me it looks like we're probably finding a bottom. We're trying to bottom. I'm trying the hourly chart really quickly, find where that volume is spiking. It's right here. Let's turn on the candles. This is where a candle's useful. So that was a sell bar with a big wick, huge wick. Zooming in again here. Let's dissect this bad boy. Yes, this looks like an inverted head and shoulder, but it's not. Big green. See that? Big green. That's the trick right there. That was a big buy candle. It's possible too that there's just a bunch of shorting on that wick, right? So very curious chart. I don't know what this is. Thank you, Stockhead. Looks convincing, right? Looks convincing. I could put a convincing chart together. Hope it plays out like that. Picked up a small position at 25 cents. Oh, you did. I think that was a good buy. I do. Yeah. You know, this kind of reminds me of what Playboy looks like right now. I don't know anything about this company again, so I'd have to look into the fundamentals, but the stock price looks like it's behaving in a way that would support a rally or a bounce, which is good. So, okay, with that said, we're going to go look at AMC for Stevie. Okay, so let's go back into the hourly time frame. We'll do a quick review here. Look into it. Maybe I will. It's on my recents here, so right? It will be for a while. Yes, Troika Media GCOM. Okay, so Stevie, here's the thing. Here's the deal. This left and right shoulder, head and shoulder thing, this looks really good. It really does. I'm pretty happy with the way that this bottom appears to be forming. We have increasing volume to the pattern, which is nice. Implied volatility is currently decreasing, which means that calls are going to get wrecked. So I wouldn't be, I mean, I was about to say I wouldn't be buying out of the money calls, but actually I'm holding some out of the money calls. I gotta take a drink when I say that. But that's because of the FOMO. I got FOMO bad. I really want squeezes, guys. I really do. I mean, it really was hard on me to it was like when the price started to dump, it was hard to forecast this downtrend because I understood how much money people were losing. Like, broke my heart. And now we got this big fat inverted head and shoulder on the daily, and I'm like, this could be really good. This could be really good. And I pray that it is, because I want to see everyone actualize their dreams. I want it to happen. I want financial freedom as much as the next guy. I want the big money to pay the price for their greed. I want to see AMC succeed. I really do. I have never had any animosity towards the company. I really haven't. And I go to the movies. I started going to the movies, and like I kind of found joy in that new tradition. And I want to see the company survive. I want to see the squeeze happen. I want everyone to have a good time. It's just the analysis has to support that. It has to have some logic in like in a fundamental way for me to get on board with that. And that has not been the case until very recently when we got this sweet bottoming pattern appearing. And let me go back over here and show show this bad boy. Look at this. This is margin. Okay, margin. Security brokers and dealers, margin accounts at brokers and dealers, asset level. So if prime brokers don't have the ability to support the margin debt and short positions are being maintained on margin, I mean, yeah, margin calls will cause liquidation in the markets, right? That means the closing of longs and the closing of shorts, and the closing of short positions is buying. So yeah, you get where I'm going with that. This is probably the only time since my crazy ape days that I've ever felt like we might get a push here. This is the only time that I've really been like, yeah, okay, I'll buy some calls, because, you know, I mean, it's a gamble. I'm gambling with it. I know that, but also it's like 2 call options, and the cost is completely covered by the profits I've been making in SPY. So I have my risk managed, and I'm being smart about it, but yeah, like I want to see it rocket. I want everyone I want everyone to get the money that at this point, frankly, you deserve if you've been holding this long. Like, good God, I bailed out at 26, like up here. See, this is the thing. This was an incredible level of hype. It really was. Go back, watch my videos. I'm serious. Go back, watch my videos from this time. I saw a potential top form like 3 or 4 different times. And I was wrong both times. And then this thing came in, this big high wick candle, and I was like, that's it right there. I bailed out. And then the price began to tank. And I was happy that I was able to help some people find the light, so to speak, through there. And now I'm just like a little worried that like those same people who I helped or helped influence or didn't help influence, I don't know, whatever you want to say. But I just don't want people to be feeling like there's zero shot of this thing, because I've never said that. I've never said there's no chance of MOAS. I have never said that. I've always maintained that there is a chance of a short squeeze, that does happen. But the conditions just gotta be just right, just right. Seeing margin decrease like this, seeing interest rates balloon, and just understanding that retail is strong. What the article in Yahoo Finance that we're dumping 1.5 billion into the markets like daily, like wow, yeah. So I'm rooting for the apes, I really am, and so I'm holding a couple of call options and yeah, let me delete this strike here, but and let me go to the chart where you're on, Stevie. Let me pull that chart up. Here you go. Let me get on the hourly time frame too. See, there you are, Stevie. I have you right here. I'm gonna put you on my wave 3 target though, which is like super OTM. But like if we get a third wave extension off of here, I think that's this one. No, that's a fib level. Let's see. I'm gonna go like this, and I'm gonna go like this. Let's see here. Wave 3. You see what I'm saying? Do you see what I'm saying? Like this 161.8% extension, which would be the top of a motive wave, take us to that $12 level. For some reason, I have that marked. I think it's a significant level of support and resistance. I have some arrows here. Like I've done some other analysis. It's just like the stuff is appearing. It really is. And it's very possible that this is an impulse wave up, and this could be a wave 2 heading down. This could be the terror of wave 2 that we're in. See, the thing about wave 2 is that it can almost completely wipe out wave 1, right? I don't know where I'm at on my screens here. Let me figure something out. I'm trying to find the chat. There we go. All right, let's see here. If you like gold, you should also be looking at HYMC, biggest gold silver mine in North America, approximately 10 million ounces of gold and 400 million ounces of silver expected to be underground. Dude, miners freaking are so volatile. HYMC. There's a channel I follow, the Gold Advisor. He's got some great analysis, and I've considered actually paying for his premium subscription because I want to know which miners he's looking at. This is brutal, right? This is brutal. Talk about gap fill. Talk about implied volatility. Jeez Louise. So my understanding of miners is that their value doesn't correlate perfectly with changes in spot price, right? It takes a while. And for me, it's like I see premiums are super high. I paid a 13% premium on a half-ounce gold coin today. And it's just like, demand's high, premiums are high, the dealers are making a lot of money. I don't know when the gold miners are going to be. I know that there's a gold miner there's like a, let's see here, like an ETF here. Let's see if I can pull it up. Gold. Let's just look up gold ETF. See if something comes up. No? Okay, fine. Jeez, yeah, miners are hard to play because it's easy to lose all your money on miners. It is. Looks like that gap fill is almost full though at 0.30. Look at the volume. Volume's super low. I actually traded HYMC back here. Wow. Yeah, when we get big gaps like this and the price doing weird things, I go straight for the line chart because the bias of the colors of the candles. 1, 2, maybe 3, 4, 5, possibly. And then just like, wow, wave down of terror. Downtrend of terror. Good God. Is it possible it's a flag? Like the worst flag ever? Let's redraw as a channel. I mean, it's definitely motive, right? 1, 2, 1, 2, 3, 4, 5, maybe 4. 1, 2, 3, 4, 5. Maybe a couple more bumps and humps. And then this motive wave down is done. Really, we're looking for like a corrective 3 wave. So when it's fitting in a channel like this, it's a little more difficult. Maybe that is 1 wave. 1, 2, 1, 2, 3, 4, 5, 4, 5. Boom. A, B, C. 1, 2, 3, 4, 5. 2, 3. Yeah. 4, 5. Yeah. There's probably a couple more bumps here, and then I'm probably going to be comfortable saying if we get a bullish move here, okay? I want to make that very, very clear. If we get a bullish move, we can maintain a bullish stance as long as we stay above that low, okay? And then we'll be calling this motive wave 1. We'll just make it cycle wave, whatever, right? And this can be cycle wave 2 down here. We're looking for wave 3. And if wave 3 is to make progress, then it's going to need to go above 265. It's very possible that we actually go in for a couple of ABCs. My brain is already seeing an inverted head and shoulders through here start to form through here. That would be characterized by A, B, and C coming up to that downtrend. And maybe at that time we start forecasting like an ascending broadening wedge, like a broadening pattern as price starts to build in some volatility. That makes sense to me. This is ridiculously speculative, you guys. This is pure hopium. We're gonna label this chart of hopium. Chart of pure, undefiled hopium. 100% pure hopium. There we go. Boom. That's what I got for HYMC. Yeah, that would look good though, wouldn't it? I mean, that makes sense to me to see the price of the mine go up as gold starts to rise. Yeah, chart looks crazy. Chart looks really crazy. It does. I'm just starting to see that ABC corrective waveform that characterizes the first half of an inverted head and shoulders. So that's why I'm kind of leaning that way. We'll see what actually happens. I mean, the RSI here is just like grinding and oversold, right? Ouch. Which means we're probably going to set up some bullish yeah, there's already bullish divergence in the RSI. We don't know where the pull up is going to be here, but I mean, look at the price. Price is coming way down. RSI is not, surprisingly. So probably finding a bottom here. Probably finding a bottom. This is the thing, is like when I look at SPX, it's like, yeah, everything's doomed to fall down. But then my look around the markets, it's just like, I don't know. Everything seems like it could be bottoming. Which makes me think inverted head and shoulder through here. And yeah, so anyway, for my SPX count, what I did is I added some bullish reversal and bearish reversal price levels, and this was on a different time frame, but I'll go ahead and just edit this so it makes sense here. Basically, what I'm looking at is the possibility that, let me get a blank chart here too. Let's go blank. Yeah. Okay. So this is currently showing the inverted head and shoulders, where these arrows are showing where those shoulders would occur. There's some hidden bullish divergence in the RSI here, so. You never know. Maybe on Monday, Yellen comes out and says, "Hey, we found a way to contain the bank fails." And then Tuesday we have CPI, and CPI is like, I don't know, moderately okay as long as it's not worse than expected. You know, that could really turn the markets to the upside. So who knows? Who knows? But if we are going to go higher, I'm going to have to figure out a bullish motive wave count through here. I think I can go 1, 2, 3, maybe 1 of 3, 2 of 3, 3 of 3, 4 of 3, 5 of 3, A, B, and C for 2, or for 4, I should say, and then 5, and then we have some sort of corrective pattern through here. A, B, and C is expanding. I'm thinking, basically what I'm saying is that this could be a corrective A, B, and C. This is what we would call a running flat. All right. So in a running flat, wave B overshoots the beginning of wave A, right? Which would be back here. So this is the peak. This is the extreme of wave A, but it starts towards 4,086. Wave B comes higher. So if we suddenly lose momentum here, and we start seeing the price reverse higher, and we can break that high of wave B, then this could be 1, A, B, C, and we start going in for 3, which would be really great. And when I do a fib study here really quick, you know, it's like, hey, that's 61.8% retracement. Let's just do a thing. Let me go back to my book here. Wave 2 is characteristically 0.618 of wave 1. All right. So there you go. It's at that level right now, and it's not totally crazy for it to bottom right below there. You can see we had a bottom right there. It's just like this 3,800. Look at this. When I extend this to the left, bottom below that price level. Whoa. Oh, we're on the daily. That's why price comes through there. But bottom below that price level, bottom below that price level, bottom below that price level, bottom below that price level. I mean, the RSI would be hinting at that, right? So yeah, it's difficult for me when I look around the market, and this like includes Apple. Like Tesla's a great example of it, but Apple's another good example where I think that we've started a new motive wave, and this is just 2, right? This is just a wave 2, and we've had a big A, B, C heading lower. Let me duplicate this and start labeling this stuff too. Let's go. I should just like go through all my charts and just start updating it all, because I spend hours doing this. Like, you guys don't even know. Like, I spend hours looking at these charts. It's just fun for me. It's just fun for me. I don't mind doing it in the slightest. I actually find it very enjoyable. A, B, and C. And we're going to be looking for that retracement again. So let's just take this retracement tool, bring it down. And we've surpassed that level, right? So you never know. Maybe, I mean, the only rule for wave 2 is it can't pass the low of wave 1. So, you know, it could keep going down. It's true. But at this point, we're crossing that bearish reversal confirmation level that I had. But also, it looks like we might be setting a bottom. The RSI reaching oversold here. This occurs. This characterizes the very extent of a corrective wave sometimes. And I need to figure out which wave degree that is exactly. But to see the price bouncing there, it makes sense to me. Get a rebound. Come on, this makes sense. This makes sense. Let me fix this flag. Let me just pull this out. Can that? It might be a loose flag. 1, 2, 3. 1, 2, 3. So this is probably a 5-way form through here. We're gonna zoom in. We're gonna look for a diagonal. We are gonna look for a diagonal in Apple. I know it's crazy, right? I make these super bearish videos, but like at the same time, I'm like, I see bottoms forming. There we go. There we go. A, B, C. This is probably E. So E, D, C, B. Where would A be? Oh, me back here. A, B, C, D, overthrow E. I mean, falling wedge, right? Falling wedge. Not really like Bulkowski chart pattern falling wedge, but Elliott wave falling wedge. Ending diagonal triangle maybe? Let's see. I'm going to be looking for a 3-way form through here, but I don't really have that. Let's try on candles here. Let's go into the 1 minute. Maybe that'll make it a little clearer. 1, 2, 3. Maybe 1, 2. Like a little pull here up. That's 2. Whoa, price. Woof. Fell way down. 1, 2, 3. 1, 1, 2, 3. 1, 2, 3. To me, this looks kind of like an ending diagonal triangle. And it just looks really good in the overall context of this right-angled and descending broadening formation, right? Could be a partial decline, A, B, C, and then we turn around, right? After all, this dump has been a fear dump. It's been a fearful dump. So, at the end of the day, if wave C went a little too far in a narrowing price range to make a diagonal like that, typically signals reversals imminent. And when we get it, it should be pretty clear. Let's go check on futures. Why don't we go check on futures? Let's see here. How do we do? Let's zoom in. Okay, so 1, 2. Ooh, look at this. Futures are holding their ground. Very curious. Very, very curious. So, waves 1, and then we probably had... Let's turn off these candles. Candles are confusing. Lines are easier. 1, 2, 3, 4, 5. Oh, yeah, that should be 1 up there. Okay. And then maybe A, B, and then C. Maybe we get like a flat through here. A, B, C. Yeah, so maybe we come down a little bit. That would make sense. Give us a nice 3-wave form through here. Let's go ahead and label it. Duplicate. Edit. A. Duplicate for B. And duplicate for C. So yes, looking for just a little pullback here. And if I were day trading, the entry would be like right here. This would be my call entry. This is what I'd be doing in the Discord. Call entry / bullish continuation. Oh, too long. That's good. I'd be labeling it like this. And you never know. We may not actually reach this 3915 because this could be a running flat maybe. Or I'll get my flat terminology more consistent in the future. But yes, it looks like this was pretty channely through here. What's RSI up to? Let's have a look. Looks like that RSI trend held and it broke here. So this is probably the top of a motive wave right there. And now we're going into correction. And you can see as the price moves through a tighter range that the RSI, because the average is narrowing, the prices in the average are getting closer together. So the RSI more reflects the price directly. And then once we start to move through a new motive wave, we'll start pushing into this overbought or oversold in a more like consistent manner over that 70 level, probably if it's bullish. GME as well. All the memes coming together to save investors with a squeeze season. I would love a squeeze season. Yeah, I got a friend who's like totally invested in GME. Totally invested in GME. Are you here, Mitchell? You're probably not here right now, but that's okay. Okay, so GameStop. I was supposing we were in this triangle, right? You don't really get a motive wave like this through a triangle, but you know, whatever. A, B, C, A, B, and C. C kind of work 1, 2, 3, 4, 5. Yeah. 1, 2. Yeah, this looks like. Let's see if we can get a diagonal through here. If I can get a diagonal through this C wave, that'd be great. Oh, maybe it's a B wave. Ooh, interesting. 3, 4. Yeah, so we're gonna do some very careful counting here. We're gonna take away these A and B. We're gonna try to figure out where the end of this 5 wave is, because again, it's supposed to be like similar to wave 1, but it's not. Hey, there's no guarantees, and there's not a rule really for how far 5 can go. Looks like we reached over. Ooh, yeah, look, we got bullish divergence here. Gonna take that low from 310. Just gonna draw that. Whoops, that's not what I wanted to do. I wanted to zoom in. Let's just go really close here. That's too close. Go further out. Yeah, I like the hourly. The hourly is my preferred time frame. If I need to go into the 15-minute, I will. I day trade on the 1 minute, but the hourly is really where I like doing my analysis. Let's turn that on. And I'm going to draw a line here too as well. Whoops. Make this green. Say, hey, we've got bullish divergence here. Doesn't necessarily mark the end of a motive wave, but it can. It can. As you can see, there was some bullish divergence back here towards the end of wave 3. We've got a corrective wave to wave 4. Maybe we can even say that we have a bullish divergence on a larger time frame, but whatever. Implied volatility is rising right now. That's the thing. Implied volatility is rising. That downtrend ends and implied volatility right there towards 18. Implied volatility starts dropping above there. I bet you that we actually are about to start bouncing here too. That makes sense. That makes sense to me. I want to really scrutinize this. 1, 2, 3. 1, 2. 1 of 3, 2 of 3, 3 of 3, 4 of 3, 5 of 3. A, B, C for 4. And then we start this fifth wave of here. 1, 1, 1. Okay, so 1, 2, 1 of 3, 2 of 3. Are you ready for this? 1, 1 of 3, 2, 1 of 3, 3, 1 of 3, 4, 1 of 3, 5, 1 of 3. 4 of 3, 5 of 3. A, B, and then we're going for C. Where am I at? I'm at wave 5. I'm looking for probably one more low for wave 5 through here. That would give me a triple bullish divergence. All right, one more price low. I'm going to draw that along here. One more little dumpcito, and then we get our rally. Duplicate this. That would make sense to me. That would make sense to me. And with the way that this extension is starting to line up, it looks like it might even be kind of forming a three wave, which at this point in time would mean, oh my God, look at that. What? That's a perfect hit. Perfect hit at 1689. If I were day trading GameStop and I had to place a bet, I would bet it bounces at 1689. And then we start correcting this overall C wave, which is seriously getting out of hand. A, B, C. 1, 2, 3, 1, 2, 3. And then we start 5. After you get a couple of threes like that, 3, 3, 5 comes to mind. And then we get ugly double bottom, and then we'd be looking at an ugly double bottom, and our confirmation. I'm just going to put it on the chart right now. I'm just going to do it. I'm going to label it ugly double bottom conf. All right. There we go. And the price target for the ugly double bottom would be high. It would be high. And it is unconfirmed, but maybe I should just do the analysis. Let's just take this high. Let's take this low. Let's come up here. And then let's go to Bulkowski's website really quickly. Service unavailable. What happened? Kitco? What happened, Kitco? Huh? There we go. Looks like gold is finishing this zigzag. I was saying we might find another low here. We'll see if Hong Kong buys the dip. You can do it, Hong Kong. You can do it. You can buy the dip too. Everyone can buy the dip. Let's see. Yes, here's Bulkowski's website, the top right of the screen. Let's look up ugly double bottom. Ugly double bottoms. Yes. Think of an ugly double bottom as a double bottom in which the second bottom is significantly higher than the first. Ugly double bottoms can help you time the entry when bottom fishing, which is exactly what I'm doing. I'm bottom fishing. The average rise is exactly the same for as of all double bottoms, 33.7% when compared to 1,452 double bottoms from 1991 to 2004, but the failure rate is worse, 8%, versus 5% for all double bottoms. The following statistics are based on a study of 562 patterns found in 100 stocks from July 1991 to July 1996, discovered by Thomas N. Bulkowski in March 2006. Overall rank for breakouts, 14.5 out of 23. Not the best. Percentage mean price target, 76%. Okay. What are we looking for? Downward price trend. Downward leading to the pattern. Check. For best performance, choose patterns at bottom of the downtrend, not as part of a congestion region and uptrend. Got it. Definitely at the bottom of a downtrend. Looks like a double bottom with unequal bottoms. The second bottom should be at least 5% higher than the first. Okay, so 5% higher than the first. Where is this low, I guess? That's the question. Let's just drop that down at 1577. I'm going to do a quick little calculation here. 1577 by 1.05. What do I got? 1655? Hey, I'm calling for 1689. Come on. Come on, the numbers are adding up really well here. Really well. I love that. You just can't make it up. Volume recedes 81% of the time. All right, well, I'm going to say that at least in the latter half, volume's receding, like definitely not going up. Breakout, upward when price rises above the highest high between the two bottoms, which I've marked currently as $24. Confirmation, the pattern confirms as valid. as valid once. Ooh, typo, Mr. Bulkowski, you have a typo. The pattern confirms as a valid one. Oh, not a typo. When price closes above the peak between the two bottoms, if price does not close above the confirmation price, then it's not an ugly double bottom. So he's got this shown here. He's got his buy line down. As an example, consider the figure to the right. Point 1 and 2 show the two double bottoms after the price downtrend. The pattern becomes true. Ugly double bottom of the price crosses that horizontal blue line, which I'm showing here at 24. So, okay. Mr. Bulkowski, thank you for the notes. Thank you. Now let's figure out the measure rule. Compute the height from the highest peak, point C in the measure rule, figure to the right, to the left bottom, low A. Okay. Then multiply by the percentage mean price target. Add the difference to the breakout price, the high between the two bottoms. So our percentage mean price target scrolling up was 76%. So I'm going back to my chart now. Taking my Fibonacci extension tool and finding that low at 1577, taking it to the highest high. Wait, I'm doing this backwards. Wait, it's already on there? Oh, I already have it here. Okay, so we're just going to take the Fibonacci extension tool and we're going to make one of these levels. Well, let's take 0.786. That's pretty close to 0.76, right? We'll just modify that. It's like basically a fib extension off of one of the peaks. So also it needs to be negative because the extension tool is upside down currently. That's what I was talking about earlier. Sometimes when I do this, the extension tool is not pointing the right way. There we go. If ugly double bottom, then what am I looking for? What? Where are you? Where's the target? What? Okay. Figure it out. Maybe it's not negative. Maybe I just don't know. Where is it? Wait, what? This tool broke on me. Delete. Okay. Here we go. Fibonacci extension. Take this to there and then to here. And you can see that positive 100. So it's going to need to be a negative value. Edit properties. I'm going to uncheck those. Make this. We'll use the fib 0.786. No, we don't want to do that because that'll be too optimistic. Make it negative and go. Okay, there we go. Now it works. $32. If double bottom, then $32. Not bad, right? Really not bad. Overall, I think that's pretty sweet. Pretty sweet. Absolute legend. Thank you. I would like to hope that, well, it's not really like I'm making it up, right? It's like Bulkowski. Bulkowski's a legend. You know, I just found the website in the Google search one day and then started vlogging about it, which is kind of funny if you think about it. But yeah, oh man, wouldn't that be nice? But first, the price has to get above 24. Let's look at the longer term chart. What are these drawings up here? Get rid of all that. Let's look at this thing. Man, this is what I call extension hell. Just, ugh. 1, A, B, C for 2. 1, 2, 3, 4. Yep, 5 for A, X, and then A, B, and then A, B, C. So maybe we've got to be ending a massive corrective trend through here. It just makes so much sense, doesn't it? Just makes so much sense. I don't know what degree we're on. I'm just going to start drawing stuff. Could it be A, B, C, somewhere down here, D, and this is overthrow E? Let's turn on the weekly chart. Nice. Okay, so on a weekly chart, let's go. Okay, we're going to delete this. All this is going to go away. Clear drawing sec. Slap the ass, got open, as always. It's like, look at this thing. It's like, how am I not supposed to look at that and say it's a flag? I mean, the time frame's all off, sure. But like, I mean, come on. It's beautiful. How do you look at that and say that's not a flag of some sort? It's got a massive flagpole. It's got a massive flagpole. And then it's got this sweet ABC structure to it. Of course, the pattern's so high, right? That's just like whatever, -2. Like, in log scale, it just looks beautiful, doesn't it? And if we're setting a bottom here, and we're looking for, where's 24? Let me put 24 down here somewhere. 24. Where's that at? That's okay, down there. And then what was my target? Let's see here. I mean, we don't have a target yet. Let me make that very clear. The target is not yet, but it's 32.90 if we get the confirmation. If we get the confirmation. Let me just duplicate this. Edit 32.90. And that would probably be like wave A of a corrective move higher, right? So if we actually get this move, right? Not bad, right? 49.20. Yeah, that put us right here. Let me extend that to the left. Extend to the right. What? Edit properties. Extension. Let's just turn it on. Is that gonna work? I don't know. But seriously, you can see this level here and how the price cuts through there and spins on it before it rejects. Like that's a significant level, 49.42. So if we get an ugly double bottom through here, we get a retracement, could be a sweet handle. We break that downtrend, and the price soars. Interesting stuff. Interesting stuff. And when I do big long-term price analysis like this on AMC, it's very similar. So yeah, this could be some really stupid stuff we got coming at us, which is really cool. It doesn't make any sense. It really doesn't. Everything's overvalued. But like once you let go of that and you understand that nothing has to make sense, it's really freeing. Yes, I believe we're in for a treat too, and it's irrational. And it might be because the short sellers are irrational. It could be that institutions think they're better, but they're not. We're all human. We're all the same. So the same way in that apes are just crazy, honestly. It's possible that same level of vigor, of enthusiasm exists on the short side as well. And the tables will be balanced. How dumb is that? But it's possible. That's crazy. That's crazy. At any rate, I'm excited to see how this all goes. I mean, again, going back to SPX, like, it makes sense that we go back to 320. It does. Like, I was looking at this big old chart. We'll talk about this big old chart now, too. That's how every empire falls. Complacency, right? Yeah, that's exactly it. So I want to talk about this SPX chart really quickly because I was just really wrestling with it. And there's this big channel. And if you watch Ron Walker's channel, I know Ron Walker is repetitive. The guy says the same thing 4 or 5 times every video, and then he asks for your money, and then he makes you watch ads, and it's like, dude, we get it. Chart pattern trader, ooh, friend of retail, blah, blah, blah. But the guy has got some really good analysis, and he's right quite often. And so I follow him because, you know, credit where it's due. At any rate, he and I have the same channels going through here. We have the same uptrends, and our targets are similar. So what I did is I took this channel that I'm showing in yellow, and I broke it up into quarters. When I do that, I find that price tends to spin, bounce, or react with each one of those uptrends. Currently, the price is interacting with the 75 or 25% level. Let me zoom into the day. And let's just zoom in again here a little closer. You can see Right here in yellow, this is one of those trend lines. Look how close we are to it. And when I do my motive wave count, it's like, yeah, maybe we have one more little low, but even if we don't, we're right there, right near to it. Right near to it. So, and it's right above the bearish reversal confirmation. So price could come down here and spin and then get thrown up, or just like, bounce up. We get this dead cat bounce for wave 4. Wave 5 takes us to a new low. RSI sets up the sweet bullish divergence. And then somehow, miraculously, everything's okay. I'm not ruling it out. I'm really not. It's just sentiment right now is ridiculous. Sentiment is ridiculously bearish. When I look at this chart, you're going to notice I have super cycle 1 coming to the 2000 high, and this sideways super cycle 2 ending in 2009, and then this big push higher. And when I turn the chart into like blank, and let's actually just clean this up a little bit, clear drawing. Yeah, get all those off of there. What we don't typically see in SPX is a flag, right? We don't see a lot of flags in SPX, but all the cash that was injected into the system in COVID, I would argue, formed a flag bull, right? And this sharp correction, you never know. It could be over. This could be a flagpole, right? And we could be starting to break that flagpole. This could be 1, A, B, and C could come somewhere in here. It could come a little lower, and then we start wave 3. What? And it just could fly. It could just fly. Like, I see that. And I know a lot of people don't right now, but I'm the contrarian. So as soon as the markets capitulate to the downside, I'm like, gonna flip bullish. Just can't help it. I just can't agree with everyone else. I don't know. Okay, everybody. It's been a long time. My voice is getting tired. But I really appreciated everybody coming in, tuning in, interacting, looking at charts, hanging out on a Sunday. It's going to be a wild week. Monday, we're going to have news on Monday, no doubt. I think the Fed has an emergency meeting. Someone was posting that on Discord. And then also we got CPI data coming out. So those two things are going to drive everything. I can see waves 4 and 5 of this downturn establishing in the near future on those 2 days. And from there, we'll see if we don't get a rally. If we do, I'll be playing calls. No doubt. I'll be trying to play sentiment as well. As soon as the news starts to report about the crash and everybody else knows about it, I think maybe that would be the time to call the bear trap. Remember, there is going to be a time when I'm going to need to flip bullish, and I'm looking for that very anxiously. So I'm getting ready to make that switch for the bull run of the century, probably, honestly, if it happens. But you never know. I don't understand how it would come right now. I still think we have one more push higher before a push down, and then that would be the end of the bear market, and then we can run to the races. I thought that'd be a 10-year process. Who knows? It could happen in 2. Timing is hard. I'll be studying my brains out, and I'll be doing that Fibonacci sort of analysis in the coming weeks. So stay tuned for the daily updates. Get in the Discord. I'm going to be trying to make shorts as I day trade this week. It's going to be a wild ride. Thank you for tuning in. Cheers, bro. Thanks for the analysis. Spot on. Everyone, you're amazing.